In this video we will talk about Teladoc, and it will be a little bit long video. I will try to make a prediction about the price for this year and 2023 again, plus we will check the presentation and some competitors. I think it is a good idea to start from valuation, because if it is overpriced, we don't actually need to talk about it. Gross margin 68%, and it is absolutely okay for a young company, and with this amount of gross margin on a long run, probably they can make profit margin around 20% or something like this. Then we need to open this magic table, and you can find the link in the description down below. I don't have a super nice expectation about this stock, but probably we need this site revenue growth rate 20%, and you can check it fast on a Guru Focus. You can see it here, future revenue growth rate 25%, or the same information you can find on their guidance, and they have the same guidance, maybe 20%. 20% growth rate, and I think maybe 10% margin, and it means that it is interesting up to price to sales 3, because with price to sales 3 we're getting CAGR around 24%, and it will took 11 years to extend our money. Now we have a really interesting CAGR for value investors. Price to sales right now 2.43, and we never saw the same prices. It is definitely interesting because it can be not a normal valuation, and if it come back we can see a better results. Anyway, with price to sales 2.5 and CAGR 20%, we can expect maybe $35 at the end of this year, and maybe 40 with something at the end of 2023. In the end of this video, I will offer you a perfect and very sweet option deal for this stock, and probably I will buy it for me too. If you don't want to watch this part, you can use timelines. January 2022, JP Morgan Healthcare Conference, and this presentation quite interesting because we can know about Teladoc Health a little bit more. 76 million members, 10,000 providers, and I think this number very important because they acquire Livongo Health, and now they have 800,000 connected devices, and it is huge for data. I hope you already know that data it is extremely valuable for some AI training, and who controls the data control the money. Revenue CAGR 69%, 40% organic, and I think here you can see that everything is okay with Livongo. Plus COVID-19 boosts them a little bit. I really like that they are not staying on a beta help and on dermatology. They're acquiring new companies like Stat Doctors, Medicine Direct, and Livongo plus My Strength. Plus they are opening in other countries like Canada, United Kingdom, France, and now they are international. It is awesome too. They are shifting to Teladoc Health of tomorrow, integrated ecosystem platform, and now you can use it for all healthcare needs, and it is awesome, from lose weight questions to fever, and like just to get some advice about surgery, and just have another opinion. It is quite interesting, but from the other side you can spend like $300 for a 10 minutes consultation. It is not really cheap. Mental health care, chronic care, virtual medical care, and here you can see diverse data source. They aggregate lots of data. And it is not just some sort of a startup, it is quite big company, and they are working for years. Now they aggregated a lot of data, and it can save your life, like a magic button or something like this, or a magic pill. Because if you have a lot of data, you can find some really interesting insights about people's health. Increased revenue per member, product penetration and engagement. They still have some room to grow in membership and product penetration, because they have a lot of products, and here you can see that now it is 4+ products in maybe 15% of their users, and it is awesome because they can buy new companies. Fiscal year 2024 revenue target $4 billion, and we already know about CAGR, maybe it is 20%. I hope they are shifting to 20% operating margin company, and with $4 billion in revenue, they can generate maybe $800 million, and with price to earning 10, it will be $8 billion company, and now it is 5 with something billion dollars company. Definitely it is quite cheap right now. It is fresh presentation, the second one, about Q1 earning, and you can see that revenue grew 25%, but I think it is very important that they have net loss per share $41. It is quite high, but I think it is just GAAP manipulation, and they just write off goodwill, and goodwill is just maybe a Livonga name or a Livonga brand. Nothing interesting, but it is a loss, and they can use before tax money to actually acquire new customers. From my point of view, it is awesome when you can manipulate a little bit with your taxes. Here you can see the guidance, revenue for fiscal year 2022, $2.5 billion with a growth rate 20%. And I think with these numbers they can be cash flow positive. If we will check 2021, they have already $130 million in free cash flow, and it is awesome. I hope 2022 will be okay, and maybe in 2024 they will be GAAP positive. Here you can see the brands, Teladoc, BetterHelp, Healthiest You, In Touch Health, Livonga, and Medicine Direct. And I really like Livonga because they help with diabetes and some other stuff. Very helpful company. But what I don't really like, it is a competition, and you can see nearest competitors, and they are quite huge guys. 2,000 employees, 3,800 employees, and some of them actually working in the same place, like health tech, telehealth again. Not really nice for Teladoc, but I think they are working quite good. Anyway, we will have maybe Teladoc Health plus Amazon Health plus maybe 1 or 2 companies in the future. From my point of view, it is absolutely okay just to buy the stock and hold it for maybe 5 years, and everything will be okay. Because definitely it is cheap right now, but it is not a really nice market condition, and I think you can maybe sell $20 put, something like October puts, and finance call options, and it is quite funny. I can't even show you these strikes because we have even for December only last strike $30, not really interesting. But for December 16th, you can see strike $30 and last price was 6.75. For this amount of money, you can buy $40 strike. Maybe it will be profitable, and if it wouldn't be profitable, you can just hold this company for a little bit longer.